Welcome back to Adventure Capital, a podcast hosted by Wefunder, exploring the world of community rounds. I'm Johnny Price, president of Wefunder and shabbily dressed podcast host. This week I'm joined by my long-suffering colleague, Justin Renfro, Wefunder's director of growth, or as his LinkedIn bio so lovingly puts his title, Good Vibes. This week we talk with Micha Mikailian, the CEO of Geoship. Towards the end of 2024, Geoship closed on 1.9 million in capital, raised from 1,151 investors on Wefunder. A serial entrepreneur, Micha has raised tens of millions in capital for a number of companies he's founded and been involved in down the years. And he's also raising from institutional investors for Geoship in parallel to his customers and community. But he also sees great value in inviting his community to become owners and investors in Geoship, which he articulates beautifully in this episode. Before we get on with the podcast, we're required to let everyone know that anything we say here should not be interpreted as investment advice, recommendations, or soliciting investments in any company. And now, on with the show. Micha Mikailian, CEO of Geoship. Welcome to the podcast, man. It's great to have you here.
Ow! Thank you.
Love that. Love that energy out the gates. And speaking of energy, joining me as illustrious co-host, perhaps for the first time on Adventure Capital, not his first appearance on Adventure Capital, but maybe his first appearance as a co-host, long-suffering partner in crime, colleague of mine, Justin Renfro. Justin, welcome to the podcast as well, my friend.
13 years of long-suffering.
Yeah. That's not quite the same positive energy that Micha gave us. Misha's, woo, let's go! And Justin's 13 years of long suffering. But yeah, great to have you both here, especially Micha. Micha, it's been awesome working with you and the Geoship team now on your Wefunder raise. But before we get to that, maybe you could just give us a brief overview of what you guys are building at Geoship and the journey that you guys have been on so far.
Oh man, thanks. Yeah, at Geoship, we're building the future of home. It's what would this world look like if we can make a home that's 5 times better than any home on the market, but it's half the price of the entry-level home on the market, like you're living in a beautiful, gorgeous, fireproof, hurricane-proof, mold-free, healthy, all-natural home. And we're able to start providing those homes for less than the cost of people's rent. It's going to be a pretty transformational technology that could really change the way we live, change the way we connect with our neighbors, change the way we connect with nature and community. And we feel like we're building the tools for a new world. And it's a much better world where housing, all the challenges around housing get solved. So it's an amazing technology. It's based on real first principles and a breakthrough material science with these bioceramic composites. And we couldn't be more thrilled to bring it to life.
Love that. And so a home that's 5 times better than our current homes, what does that mean? What does that look like in practice?
Yeah, right now I'm saying 5 times better than your average, stick built, suburban home, your entry level home. It's a home that's made of all natural materials. So materials that are found in your body, like magnesium, calcium, phosphate. So there's absolutely no chemicals, no toxins. There's nothing for mold to grow on. There's no organic compounds in there. It's like raw minerals. It's a home that's fireproof. We see how fires are devastating our housing stock. It's a home that's hurricane proof, and everything that's going on with climate related resiliency is a huge deal. It's a home that's affordable, that's scalable, and it's just beautiful. The geodesic, I don't know, I don't have the background on right now, but these homes are just stunning. They're lots of natural light, big windows stretching around the whole home, and beautiful floor plan. It's really it's a revolution driven by first principles, and it's materials, geometry, method of manufacturing that allows us to achieve some pretty amazing heights for the low-cost home.
And if you want to see what Micha's talking about, Geoship is the website, right? And then also, obviously, the Wefunder page is wefunder.com/Geoship. So go and just look at some of the visuals, watch the video, and see what kind of Micha's talking about here. How did you get into it, man? Walk us back, and when did you get into it? What was the genesis of the company?
Yeah. Personally, I've been a serial entrepreneur my whole life. I've started 8 companies, and I came across Geoship. I'm actually not a founder of Geoship. I feel like a founder, but I'm the CEO. And I met the founders initially about 5 years ago. And I had exited a company and I bought a big, like 100-acre regenerative village, basically, that I did. I chose that I really wanted to raise my kids in community, in nature. My wife wanted to like homeschool and start like a co-op homeschool. So we bought 100 acres with 8 houses on it.
Where
We
was this?
When was this?
Where? When and where?
Oh, in Northern California, in Grass Valley, Nevada City area. And this was like, we closed escrow on the property a few months before COVID hit. And so we were like right in this like early phase of people trying to like exit the system in different ways, but we had that idea in our head beforehand. And it was really interesting because when COVID hit, a bunch of our friends showed up there and the houses got filled right away. We had friends like living in like trailers and like motorhomes because we were just having the time of our life during COVID. We were partying and having fun and having dinners every night and working on the land and planning food. And all of a sudden I was like, man, we need more houses on this land. So I just started like getting obsessed with the housing industry, and I started researching all the new companies, all the new technologies. I actually made investments in multiple companies, including some of our competitors, and then Geoship. And when I got connected with the founders, first I pre-ordered them. So I actually invested in them on a crowdfunding campaign. And then when they came out with pre-orders, I pre-ordered some. And then I started hounding the founders and saying, like, when am I going to get my dome? And it led to some conversations where we started getting into some strategy sessions. They asked me to come an advisor. And a few months into that advisory relationship, the founders said, hey, man, we really want you to come lead this company. Will you come here and be the CEO? And it was a really big, it was like this choice. Like I'd go to bed at night and I couldn't stop thinking about it. And I'm like, what would the world look like if this happened? And I knew that I could make a material difference in our trajectory. And the founders were like brilliant engineers and designers, like, and beautiful humans, like such high integrity, amazing people. But like I had the business sense and the network and the know-how to drive the scale on this. And I was just like, man, I can't say no to this. And my kids were in support of it and my family was in support of it. And I just went all in. And so a couple of years ago, I went all in and took on the role of CEO and really led us out of like pre-seed R&D phase into like our seed stage and product development to build our first go-to-market product. And right now we're like weeks away from starting manufacturing. We made so much progress in the last couple of years. It's just been insane and we couldn't be happier.
That's also meant. Go ahead, Justin.
I remember in 2023, it was late 2023, I came and visited, and you're touring the manufacturing facility. You're seeing all the different components, and we're talking about market size that starts with a T. We're talking about $1 trillion market. And the going notion is like looking for unicorns, billion-dollar opportunities. And it was so interesting to me. Like, where do you start coming in and taking the leadership role as the CEO and looking at $1 trillion market opportunity when we're talking about very complicated supply chain, manufacturing and distribution and marketing and fundraising? There's so many big pieces to the equation. How did you start?
Yeah, the $1 trillion opportunity starts with the other big T, and that's the team. And I was just like, we need like the world's greatest at every single position in this company. We need to find the best of the best, the people that are like so deeply aligned. And the first person we pulled in on the team, a woman named Dolly Singh, she was the head of talent at SpaceX, helped Elon.
Pretty legit brand on your resume, SpaceX.
Yeah, I mean, she led the talent recruiting effort at SpaceX from 200 to 5,000 people.
That's
was
insane.
Like a person. And after that, she left and went with Oculus pre-Facebook acquisition and brought in all their key leaders. Like she's the shit. She's the GOAT. She is the one. And she helped us build the most amazing team. Shout out to Dolly if you're out there listening. We appreciate you. She pulled in Craig Derian, our CTO, who was like championship winning NASCAR engineer, 7 years at Tesla during their most critical time of that company, left Tesla to go be the VP of engineering at one of our biggest competitors for 5 years. And he was like, he got it. He knew it. He knew what it took to set up factory built housing standards, to set up the manufacturing facilities. We pulled him on the team. Then we pulled Andrew on the team, our head of manufacturing. He built the tent in the Tesla parking lot that got him out of production hell. He's just,
wow.
a 10x engineer, total brilliant guy. Before that, he redesigned the golf club and had a huge impact on TaylorMade and their trajectory. And just everybody like we're pulling into the team has just been like world class. And that's how you do it. If you want to disrupt a really big market, you got to get a world class team. And I think that's been the main thing, really. I focus on hiring amazing people that are world class, that are 10 times smarter than me, and getting out of their way so they can make their magic.
Love that. And once you've got the team, to Justin's point, then what does the journey look like over the last 2 years?
Yeah, it's been team, it's been fundraising, de-risking the company financially. It's been like really focused. There's so many different things we're working on simultaneously that have to go perfectly to hit our targets. It's really focusing on critical path, like what's in the way of critical path today and any given week. That's a different thing. And just making sure that people have the resources and the support they need to clear whatever hurdles they're facing is really the name of the game now.
What have you learned most in that process of kind of juggling all of those different balls simultaneously and being in this like perpetual state of like chaotic orchestration over multiple years?
Yeah, I think it's like the more complex it is, the harder it is to know what your needs are. And this is like the advice every entrepreneur gives every other entrepreneur. It's like it's going to take twice as long and cost twice as much. When and then you go in and you're like, okay, I'm going to raise twice as much and picture it twice as long, and then it's like even more money and more time. It's the I think the level of complexities we're dealing with, it makes it really hard. Like it makes it hard to forecast what's possible and by when kind of thing. So I think the most humbling part of this journey has just been like, okay, like we ran into some roadblocks. It's taken a little longer. We need some more cash, but because we have such an incredible community of support and investors and people, we've moved through those things pretty painlessly.
You mentioned de-risking the company there. Nice, beautiful, seamless segue into the kind of financing and Wefunder discussion. Maybe before we get to Wefunder, can you give us the kind of outline of the funding journey that you've been on, even maybe before you joined, but
Yeah.
over the last couple of years? How much have you raised, from whom? Yeah.
Yeah, when I joined the team, we had a pre-seed round. It was a pretty small round. I think it was like 1.5 million. So, not a lot, but that actually got us through 6 years of R&D and got our first prototype built. Like the amount of work that was done on that pre-seed round just blows my mind in terms of how scrappy they were and what they were able to accomplish. And then as soon as I joined a team, I went to work on our seed one, which is a very small round. It was like a $3 million round. And that helped us hire our go-to-market team and secure our pilot production facility, which we secured. And then we bumped up the valuation by 50%. We did a C2, which is the one we did on Wefunder, and that went really well. We closed 5 million there. Our stretch target was to close 5 million in 90 days, and we actually closed the 5 million in 7 weeks of going public with it. It was pretty amazing. And yeah, that was our C2, and now we're raising a little bit of accredited money here as a bridge on a rev share note, and then going to go into our Reg A this fall as we deliver our first product to customers and consider ourselves in market and de-risk from a regulatory basis and from a product basis, and that we've proven we can actually deliver the product.
Got it. On the Wefunder front, can you walk us through your decision? What were some of the kind of things that you were considering as you were considering launching a community round? Yeah, and then why did you decide to pull the trigger on it?
Yeah, it was a pretty easy decision for us to launch a community round on Wefunder. It had been in our ethos even early on. The founders were really committed to crowdfunding, and we really didn't want to just have like institutions be able to have access to our company. Like we wanted the people that really cared about this mission, that really supported this movement, to be the people that benefit from like the wealth we were going to create in the world with this company. And just having their support, like they have been our biggest fans, our biggest evangelists. And I would say for every person who just invested like $300, some of them have brought $1 million of value to us outside of their $300 investment. And just having people bought into the company on an equity basis through crowdfunding and then seeing them show up for us and like it's their favorite thing in the world and like it's their life mission to get their friends enrolled and to introduce other people. Like we've had literally $1 million investors that found out about us through somebody who invested $222 on Wefunder and can't stop talking about us. And they were at dinner at a big,
That's so awesome,
a
man.
wealthy person's house, and that person was like, they couldn't wait to share Geoship with them because they're now an investor too. And that's the brilliance. Not only that, like 70% of our investors have become reservation holders and actually ordered our product. So as we're like out there marketing ourselves for investment, it's also turning to a lot of sales and reservations for us, which has just been phenomenal.
By the way, did we talk about getting the WeFunder commission on that $1 million check? Because I think if it came from a WeFunder,
Is that how it
that's
works?
I'm pretty sure. I'm pretty sure that's in our terms and conditions. Yeah. So our collections department will be back with you about the commission on that $1 million.
Oh, well, we'll have to chop it up. I wasn't sure I read the fine print there.
Yeah, just kidding. Justin.
One funny story is we were out in Gun Barrel, Texas, doing a team retreat in January, and I giddily called you on the phone as soon as I had a random conversation of somebody who learned about Wefunder through Geoship. They invested in Geoship. They got an email saying, "Hey, we're doing a happy hour," and he happened to have a ranch right outside of Gun Barrel, and he was like, "I bought all this land and I need to build housing on it. So I invested in Geoship and they're going to basically create my dream village." And it almost connects directly to your origin story with Geoship. It was a similar circumstance happening in the middle of nowhere, Texas.
Yeah, it does feel like our product is really built for crowdfunding. There's so much passion and enthusiasm behind it. Customers have a real emotional connection with our brand. They really like care about what they're doing. They resonate with the why of why we're doing it. And I think it's a product that's really going to help usher in a better world for people. And there's just so much excitement about it. Yeah, it's like we had that hypothesis, but I would say I was still skeptical. Like when I joined the team, I was more used to, I'd raised over 50 million in my career. Most of it had been through like institutions and some angel, but I'd never done crowdfunding before. I thought it was cool, but I'd never done it. And I was a little skeptical. I was like, yes, we're definitely doing this for the seed. I don't know if we could do this for a Series A. But I was like, let's do it for the seed. Let's see how it works. Let's test the data. Like how much energy do we have to put into it and how many ads do we have to run, et cetera. And what I found out is it seems very scalable. And like right now, right, like just all the data we got from the seed round is, yeah, if we wanted to raise all the money we need to scale this company, we could do it through crowdfunding. So we're at a point now where we're really committed to continuing to do crowdfunding. And if we do take institutions in future rounds, they might be the lead, but we're 100% committed to providing the same amount, same terms, at least that amount of equity to the retail investors through equity crowdfunding so we can keep building like a deep movement behind the brand.
I love that, man. I want to circle back to that, but just quickly to touch on what you said there, the skepticism. Initially, you were skeptical. Why were you skeptical? Was it just don't know how much we'll be able to raise? It sounds like maybe we have to spend tons of money on marketing and advertising. Don't know if this is scalable.
Yeah.
Is that the main? Yeah.
Yeah, I think I looked at the total amount raised on equity crowdfunding versus other types of funding sources.
Oh yeah, it's a drop in the ocean. Yeah.
I was like, wow, it's such a small amount. And then I started talking to some of my VC friends, and they're like, I don't know, I don't like investing in deals that were previously crowdfunding because they're just to them, it's probably like disrupting their space. But then I started finding some VCs that were like, yeah, we actually think it's cool, and if you get a lot of customers out of it, like it's definitely worth the investment. But I think what founders need to be is they need to be really real. Like when we've priced our rounds, we made sure we're pricing them at a price that we felt that institutions, larger scale credit investors can get in on it.
Yeah.
I think the problem VCs have with crowdfunding is some people go out at these like crazy high valuations
100%.
that don't make sense, that aren't really driven by the market.
Yeah.
And they raise a little bit, but it's not enough to de-risk the company. But then they shoot themselves in the foot because they can't get follow-on funding at that valuation or higher.
100%. Also, and this goes back to what you were saying earlier, right? A big part of why you guys did it, because you wanted your customers and community, your early kind of champions and cheerleaders to benefit from the wealth that you create as a company and to grow with you. And if that's the mindset, then you don't really want to screw over your stakeholders by raising on a valuation that's like way out of line with market. But yeah, totally agree. See some of that happening, and it's just, this is not good for the kind of health and future of the industry. And yeah, I think that kind of contributes to some criticisms of the space. The other one I get a lot from VCs is actually now antiquated, where they're concerned about the impact on the cap table, which did used to be the case in the early days of regulation crowdfunding. But then the 2021 SEC rule changes now allow for SPVs, so we can roll up all the investors to one line your cap table. So you get around that. You fix that problem as well.
Yeah, no, it's really great from a cap table perspective. And I, at the end of the day, would you rather have just a small handful of well-connected people behind you, or would you rather have thousands of people
And
behind
to
you
your
that have
point, do
all kinds of?
both, right?
Yeah, do both. I actually, my strategy right now is let's take the best of both worlds. Like I'm talking to a handful of institutions right now about leading our Series A, and I'm committed to raising an equivalent amount, if not more, through the crowds, through the retail investors at the same valuation. And I think that's the play. That's really, if you can have your cake and eat it too, you should. But it's it does take some work. I'll be honest with all the entrepreneurs out there, like it takes some work. You got to run a campaign, you got to have people on your team that are really focused on it, but it's the juice is worth the squeeze. Like whatever additional work you put into it, it's going to be a much higher ROI in terms of de-risking your company, because you're going to prove product market fit, you're going to get those pre-orders, you're going to get a jolt to your like early revenues, and the network effect is huge. To create a movement behind what you're doing has a huge impact on your brand.
Yeah,
And your valuation. I think we're going to get a higher valuation or Series A because we already have $300+ million in pre-orders now, and we wouldn't have had that if we didn't crowdfund.
Yeah, we talk about like movement, and that's very much how I feel as an investor in Geoship. And one of the things that you've done really well that I've been lucky enough to have some perspective on is the strategy and the orchestration of investor relations, where it's like you have 1,200 investors and you're talking to them and you're doing webinars and you're successfully converting them from investors to pre-orders and pre-revenue. What is the kind of thought process around like how to build a movement from a stakeholder group of 1,200 and probably closer to 2,000 total investors that have come in through this retail channel?
Yeah, I think we have 3,000 investors total through all our campaigns that we've done through the history of the company. And yeah, we do have an ambassador program. So I think that's huge. We learned that from Aptera. Aptera did that. They executed really well on that. And Sarah, who helped Aptera, has also been helping us. And so we launched an ambassador program, and that's been a really big help. We also hired somebody that helped us with investor relations and really managing like the conversion of the retail to the like accredited funnel, and like all the different like referrals we would get in from our newfound fans and ambassadors, and to manage that pipeline, and just having a great marketing team, somebody that really understands how to like get a message across and how to get it out there and how to get exposure on the right channels. YouTube was really kind to us. We got some great YouTube hits with some great creators that wanted to feature our product, and that really helped out our campaign a lot. I was expecting we were going to have to run more ads to get the campaign done, but we actually didn't have to run much ads at all. Like most of it was like organically from all the different kind of exposure we're getting on different channels.
That's cool. And yeah, normally I feel like a lot of WeFunder companies, probably most WeFunder companies, are not spending any money on ads. But for a company like yours, where I don't know what the kind of lifetime expected value from a potential customer is, but it's obviously very high. You're not selling toasters here. And so when you have a high LTV like that, it actually can make sense to spend money on ads, because obviously not just are you raising capital with that ad spend, but you're also hopefully signing up future customers and generating future revenue, especially if you have the ambassador program that you mentioned that Sarah's building to turn those investors in Geoship into future customers and kind of ambassadors who can bring their friends to become customers as well, which then can make the economics much more attractive from an ad spend perspective. But that being said, it's also cool that you hit your target like before your deadline, spending less
Yeah.
on ads than you thought you might need to.
Yeah, I think ads could be great, and we'll probably spend more on ads when we get into like our Reg A, because we're going to try to scale up what we did and want to raise 50, 100 million plus through equity crowdfunding all the way through now to when the point when we go like public. Or, I think for us, It makes a lot of sense, and we can scale the ads and get a good return on it, and we probably will. I was just surprised at how little we actually had to do to get the round closed.
Yeah.
Yeah.
And then go for it, Justin.
Sorry, Johnny. This is our first run as podcast co-hosts, so still ironing out the kinks.
You guys are doing great, by the way. I think you're awesome.
Thanks, Misha. Once again, Misha being much more positive than Justin on this podcast.
But
Yeah, in practice, we're all best friends. Yeah, I use the analogy of kind of building an engine and figuring out how to incorporate investor relations and top of funnel and paid ads and storytelling and community building and movement into a kind of sustainable vehicle. And I've learned so much from Geoship through that first round into what's going to likely be a second round and a third round and like scaling up those efforts. What's your perspective of this kind of like engine philosophy in terms of seeing crowdfunding as a sustainable capital channel for
yeah.
multiple
No, I think you keep layering on the engine, right? Like when we're thinking about our Reg A and scaling from raising a couple million to like 100 million of equity crowdfunding, like we're going to build a bigger team and we're going to have a partnership program for partners that are out there promoting us. And we're trying to get those partners bought in and invested in the company. So they're promoting us as co-owners of this movement. And we're going to build a team around that. And we're just going to keep getting more sophisticated at every level, but every layer. You keep building that engine, keep tuning it up, keep focus on the performance of it. I think it's like anything else. You can't just set it and forget it with crowdfunding. You got to build the infrastructure to support it. And if it hits for you and you want to scale it up, like you got to keep investing in that. And I talked to a lot of friends who are founders who did crowdfunding that I reached out to, or I got some introductions to some people that were in my network who had done it well. And the common theme I heard from people that were successful is it took some work and they put in the work, and I learned from them. And when your team's been great, there were things we wanted improved on the platform to make some different data gathering possible or different reporting and stuff. And we've been working together to keep improving and making things work really well.
Yeah.
The other thing I would just I love it where just the word community, that's literally on my sweatshirt here, which Justin did a run of these sweatshirts the other day. You got a bunch on your desk there. If we haven't sent you one yet, it's on its way to you.
I think Justin already told me there was one on the way, so I was excited.
It used to be called equity crowdfunding or investment crowdfunding. And a few years ago, we coined the term community round, right? Communityround.com. That's the website we created. That word for me, and it's especially meaningful for me and Justin, when we were at Kiva.org before Wefunder, we were both at Kiva, and that was the word at Kiva. And now, again, that's the word at Wefunder. I wrote a blog post recently. Justin knows this about me, Misha, you don't. I never miss an opportunity to promote my blog posts, and I've written a lot of them. So there's a lot of opportunities. But I wrote a blog post about how founders running community rounds need to insert more community into the community round. And just like over the last few minutes, you've touched on that in so many ways, right? From the start of you're a community oriented company, the company itself came out of like kind of communal living experience. And then like your intention or the reason for running it being you wanted your community and early kind of stakeholders to benefit from the business that you're building, and then your kind of the ambassador program and the engagement of investors both on the front end as they're coming in, but then on the back end, like once they're invested, okay, now how do we continue to engage that community so it's not just like a financial transaction, thanks for your money and you never hear from us again, whereas okay, like you invested in Geoship and now here's where we're going to loop you into how we're running the company and keep you in the loop and engage you as ambassadors. And just in so many different dimensions, I expect one of the reasons why you hit your goal in before the deadline with spending less money on ads than you thought you might need to is because you really leaned into those kind of community kind of components of a community round versus having it be a little bit more, oh, we're running ads and it's more kind of transactional.
Yeah, no, you hit the nail on the head. It's all about community. And I've heard the statement like community is the new currency. Like it's true. It's like that is, especially nowadays, like people are tired of like kind of authentic kind of companies positioning themselves a certain way. It's like They want authentic connection, community, and it's people are craving it. And the more connected you can be to your community, the better. And it's like we've been going out to events and we've been meeting community. It's crazy. Like when Geoship decides to go out an event and we email our email list, it blows my mind how many people like fly out for the event and come meet us and connect with us in person. And it's
Yeah.
people are just really passionate and they want to be part of things that are special and meaningful and to
And
give.
they want to invest in those things and
Yeah,
own
that's
those things. Yeah.
so if you're creating any kind of brand that's meaningful, like you should build community, whether you're crowdfunding or not. But if you're already investing in building community for your brand, why not crowdfund? Why not allow them to become owners? Like, why not?
You made our sales pitch for me. I say there's literally no better way to build community. If you're a founder that's focused on you want to build strong community, literally no better way to do that than by inviting your community to become owners and investors. And as you said before, potentially alongside VCs, it doesn't need to be an either or thing.
Yeah. And I was like, also, I was really early on Tesla and I was an early investor. I was also original Roadster owner. And I was part of that community. And I saw how the community formed around that company. And it went from a pretty small community of a few hundred people to like to thousands, to tens of thousands, to hundreds of thousands. It was insane. And really that's the brand of our generation that was built on community. And even though they didn't raise money through equity crowdfunding, that kind of stuff, but community built that brand. And I really think that's how you build great brands today. Like you need community, you need connection, you need authenticity, and then might as well make them stakeholders in the company. Because if you're a stakeholder, if you're an owner in something, like I would see this along my like startup friends. It was like, oh, like my friends invested in a restaurant that was opening up in downtown San Diego. And then sure, they're an owner in the restaurant. They want to bring all their friends in and they're out talking about and saying, oh, you should check out this new restaurant. And they're hosting dinners at this restaurant. And it's like making somebody a stakeholder in something. It's like they're going to be way more like engaged in promoting you and supporting you because they're an owner. Like it's
Micha,
just
welcome to the Wefunder business development team. It's great to have you on board.
Yeah, I'm an investor in Wefunder. I participated in your community round.
See, this is why you're such a passionate brand ambassador, because you invested in us.
That was years ago. I think that was before I even joined Geoship. Pretty sure.
Yeah, I love that. If it's a steak restaurant that you're raising capital for, then like you're even more a stakeholder. But thank you guys. I'll be here all week. Community.
All right.
Community.
Wow.
Laugh at my joke, Justin. It's community.
Johnny has 3 kids, and his favorite part of having kids was being able to just rattle off dad jokes.
And I became my dad, unfortunately.
How old are your kids, Johnny?
8, 6, and 4.
Oh, wow, great age. I'm right there with you. I'm 5'7", 9".
That's the next podcast.
Yeah.
Startup dads with Johnny and Micha.
Yeah, let's go. I like that.
Micha, if founders are listening, what startups, what companies are a good fit to run a community around, do you think?
I think any company that has a product that people create an emotional connection to. And if that's not what you're doing, then you probably got to change something about what you're doing. It's like there are some companies that are just very purely transactional, or they're like trying to find this way to like arbitrage this or do this. Like to me, that's not the crowdfunding platform. I think crowdfunding is for companies that build something that people care about, that they have an emotional connection with. And
can you go a little bit deeper on the emotional connection? What does that actually mean in practice? And like, what might be an example of emotional connection that may not be obvious, that might be more nuanced?
It's like a product that solves something. And so I'll speak into kids. Like my friend Mickey Agrawal created this company, Hero, that makes these like diapers that has mushrooms in them. They developed a mushroom that eats the plastic in the diaper. So as a dad, I tried to convince my wife to do these washable diapers to be good for the environment, good for the planet. And my wife was like, we're not doing that. I'm not dealing with that extra thing on top of all the things.
I'm with your wife on that one.
Yeah. And I was like, okay, fine. So I let that go. I picked my battles. And now Mickey, my friend, came out with this like mushroom that eats plastic diapers and more things in the landfill. So when you use one of these diapers, you're actually like contributing to breaking down plastics in the landfill by buying this diaper. So you're having a net positive effect by putting this disposable diaper on your kid. And that creates an emotional connection for me. It's now I feel good about buying this product. And it actually solved the problem I was already trying to solve myself before. So then there's an emotional connection created. Like I tell everybody I know who's having kids about their diapers because I'm like, you need to be using this. You should know about this. It's something that it's emotional for me.
Yeah.
And I wish I had a better way of explaining that, but it's like things you care about, right? I might sign
It's also, go ahead.
it's like sometimes you sign up for a product and it's just makes your life a little better, but it doesn't, it's not creating like a better vision for the world.
That's what I was going to say. Like you used the word emotional connection. I also, and as you're talking, especially was thinking about positive social impact in the world. Me and Justin were on a webinar earlier today with a couple of hundred early stage life sciences, like healthcare biotech founders. And we found that like that sector, early stage healthcare, is the biggest sector on WeFunder, which is so surprising. You'd think it would be like consumer goods or like really cool and sexy products like Geoship. And it's like early stage science companies, pharma companies. And I think a big part of that is exactly what you're saying. It's Wes at Leah Labs is curing cancer in dogs, is his tagline on his WeFunder page. And all of the investors on his WeFunder raise were talking about how they had their greyhound died of cancer, and they're so excited to be a part of fundraising a potential solution to that. Or Atom Limbs is making better prosthetic limbs, and so many of the investors are military veterans who had fellow servicemen lose limbs in combat. And I think that kind of positive social impact is like a very kind of significant motivation for a lot of investments on WeFunder. And I think, yes, those raises, all other things being equal, tend to do better. It's not say boring SaaS company can't have a successful raise on WeFunder, they can. But I definitely agree with you. That's a sweet spot.
Yeah. But if you're an entrepreneur out there building a boring SaaS company, make it an exciting SaaS company that's actually doing
Yeah.
something that people care about. So like
Yeah, good point. And hey, if you're his friend, the founder of Hero, then we look forward to your forthcoming WeFunder.
I've been talking to her. She was like thinking about her Series A, and I'm like, you should do crowdfunding. So yeah, maybe we'll bring her your way.
Yeah, we'll send you another community round sweatshirt if she launches with us.
Yeah.
But any advice for if there's a founder that is inspired by what you're saying here and does love the idea of letting their community invest and strengthening their community by running a WeFunder round? What advice do you have for a founder who's either considering it or about to launch or in the middle of running their raise?
Yeah, I think my advice would just to like prepare for it, be thoughtful, give it the time it deserves. And it's funny, I invested in a couple of companies on WeFunder over the last week, and I was remember clicking through, and I clicked on one of them, and it was just like a bunch of their deck slides. It was like their WeFunder page, and I was like, done. I was like, they
Yeah.
didn't put in the time to really connect with me or tell me what they're doing. You got to connect with your people. You got to throw the webinars. You got to engage them. So my advice is to really take it seriously, and to do that, it's well worth the extra effort.
How important do you think the video is?
I think it's pretty important. It's like the first thing people see. It's like that format. It's like videos are creating an emotional connection. I loved our video. We went through a couple videos before we landed at a video we loved. I think it's worth making a great video.
Misha, I'd like to take a slightly different track. And before we run out of time, maybe end on this kind of evolution around the capital stack and financing strategy, specifically revenue share. Revenue share has been a product that we started rolling out in 2023, and we've had some good wins. And I've really enjoyed our conversations around the revenue share structure and how it diversifies the capital stack. We talk about balancing the stakeholders and broadening access. Could you talk a little bit about revenue share as a additive channel in the overall financing strategy?
Yeah. I love the idea of revenue share. We actually just raised $1 million post our round in a revenue share note. And I find it's a win-win because there's some investors that want to invest more money, but they don't want to wait like 10 plus years for an IPO and the kind of like time liquidity risk of that. But I'm like, hey, we're selling a home next quarter for hundreds of thousands of dollars. And next year we're going to be selling like 10 of these things. So we got revenue coming in. And to be able to give somebody a share of your future revenue with a preset return, like I think our revenue share note holders are going to have it's a projected 32% return on their investment. That makes up for the risk of putting your money in the bank. Like you can invest in a few different revenue share notes. And if some of those companies fail, you're still going to get some outsized returns from some other companies. And I really like that idea to have something that the duration, you can have a faster return on investment, but you can still get above market returns as an investor. And so that's from the investor side. And the win-win on the company side is from a company, I look at it as a man, like I look at these rev share notes and I'm like, okay, I'm paying back the majority of this revenue share note in years 3, 4, 5, ramping. And I'm like, what's my valuation going to be in like those years? We're probably going to be at like a 20, 30x valuation. So I'm giving away future revenue then, like a very small percentage of it, like 5% of it, 3% of it. I'm giving away the revenue then. But at that moment in time, if I wanted more cash, I can raise money at a 30x valuation premium. So from a dilution standpoint, it like the finance math on it, like really makes sense. It's if your investors are willing to invest on a shorter term premium. And what I'm finding is investors want to do both, right? They're like, we want to invest in your safe note. We want some equity, but we actually have more money we want to put to work with you. But if you're going to give this duration note to me, then I get the money back faster. They're stoked. So it's a win-win, right? It's like you're giving them an option that allows them to invest more in the company, and you're basically lowering your dilution, and you're refinancing that. You're paying back that money when you can finance your company at a much, much higher valuation. And we happen to have a product that we think we're actually have really good profit margins, and we can afford to give away shares of our revenue in the future because it's a very kind of like high margin home. I think we'll have like industry leading margins that'll make that possible. But even if we didn't, we could still raise more money then at a much higher valuation, pay back the rev share notes, and still be better off.
Yeah. Not to mention, if investors are seeing that kind of like financial upside in the short term, they'll be incentivized to come back and double down.
Sure. Yeah, exactly. And I'm feeling that the best way to approach raising money is always be raising. Don't get into this, build the machine so you can, as a CEO, like you don't need to be raising money all the time. So like the machine is raising the money for you. But as a company, you should always be offering something to people who want to invest. And if you do a crowdfunding campaign and then you close that down and then you open up a revenue share note or like an equity campaign, a rev share note, until you hit some key milestones to reduce your risk and unlock some higher valuation, then you could still raise money in between. And just the fact that you're raising money in between helps you keep that funnel open. It keeps that team working. It keeps like building that interest top of funnel. And the people that might get interest in us on our revenue share note, they may or may not invest, but then they might or may not invest in our next equity campaign. So to have an offering on an ongoing basis for somebody committed to crowdfunding, I think it makes sense.
It speaks to that kind of that core circle of Tesla, and you start to see like degrees of scale around like what this looks like in 5 years with 20,000 investors and what that can mean for the business in terms of the execution of selling homes and building communities out in the wild.
Yeah.
Love that. I don't know what Tesla's market cap is today with it's been bouncing around a little bit the last few weeks. But just imagine how much bigger it could have been if they did their first seed round as a community round, guys. Micha, we're out of time, which I'm really sad about because this has been such a fun conversation. I feel like we only really scratched the surface. We could talk to you all day. Welcome again to the Wefunder Business Development Team. I feel there's going to be lots of obnoxiously socially media shared sound bites from this. Always be raising there, the latest one. There you go, founders. Always be raising from your community. Perpetual Wefunder round. But yeah, this has been such a fun conversation. You're a busy man. Thanks so much for taking the time and all the advice and wisdom you've shared with founders. Justin, wish I could say the same thing, but back at you, brother. And yeah, look forward to seeing what the future holds for Geoship. Geoship.is again, if you want to go and learn more about Geoship and maybe put your name on the wait list or sign up for their future/perpetual community rounds. Micha, thanks so much, man.
Thanks, guys. You're amazing.
I hope you enjoyed that interview with Micha, such a wise and wonderful soul. To learn more about Geoship, check out geoship.is. And if you want to check out their Wefunder page, it's wefunder.com/geoship. Thanks for tuning in to another episode of Venture Capital. We'll see you, as the French would say, la prochaine fois.